Good morning, everyone. Tim Nyland here. Today is Wednesday, January 20th, and this is our weekly strategy call for Zacks Professional Services. Each week, we focus in on what's moving the market, interesting trends, and investing opportunities. If you have a topic you'd like me to explore in a future video, please leave me a comment below. You can check out previous strategy calls on our channel, and you can also find many more videos on investing and making the most of Zacks Pro platforms. And don't forget to hit the subscribe button below to make sure you never miss any of our future calls. Today's webinar is by request of a long-standing client that wanted to know more about cryptocurrencies and alternative ways to get exposure to Bitcoin and other cryptos. In the spirit of full disclosure, I do maintain positions in several of the stocks we're going to discuss today. I do not maintain any direct exposure to cryptos, including Bitcoin. I would like to remind everyone that I'm not here to pitch any security as a buy or sell. Rather, I'm simply here to identify analytical issues of relevance you should consider. And from here, you'll need to draw your own conclusions regarding any buy or sell decisions. So let's go ahead and get started. First thing I want to do is discuss a little bit of some of the issues that we need to consider when considering investing in cryptocurrencies. First and foremost, they're never going to pay you a dividend. Okay. They're more of a commodity, a currency. They go up, they go down, they're not going to pay you a dividend. They have no industrial application like gold or silver. They are traded via supply and demand, but the supply and demand is purely faith-based, and it doesn't have anything to do with industrial demand like gold or silver. They have no ability to compound capital over time. And anyone who's seen my webinars and has spoken with me personally knows that this is a big one for me. Investing in equities has the ability to compound capital over time, and this is a really, really big way to continue to earn return on your investment. Cryptocurrencies are just now becoming an accepted store of monetary value. Again, they're backed by faith. They are subject to intense regulation, and we have yet to actually see this play out. They are highly volatile and speculative in nature, and crypto trading is driven mostly by individuals at this point, and you'll see why here in just a few minutes. RIAs are directly investing, are not, there are actually few RIAs are directly investing in Bitcoin for their clients outside of direct requests. So up until roughly 2020, investing directly in crypto was done largely through third-party exchanges, and it was also difficult to conduct commerce via crypto. So what I want to do now is discuss my favorite alternatives to gain exposure to cryptocurrencies and Bitcoin. The first is probably one of the most obvious, obviously outside of direct investing itself, but there are many new ETFs and mutual funds. But the idea here is you've got to read the prospectus and you've got to read the fine print. I was an analyst for years and found that the bulk of the details that I needed were in the footnotes and the fine print. Do not pass those up. So these are likely not suitable for all clients if you're an advisor listening in. The fees can be very high, so you want to verify all fees. These are not your traditional investment vehicles. These can be closed-end vehicles, so be aware of what you're actually investing in. These vehicles can have lockup periods, and liquidity can be an issue. And I'll say it again, read, and look for holding periods and share redemption lockouts. Just to give you an example, one of the largest providers of crypto funds, if you will, is Grayscale. And if you go through their prospectuses, you'll see they have the investment terms laid out, and you'll see redemptions, and I have the secondary market trading here circled in red. There's basically a 1-year holding period. Shares are eligible to become unrestricted and resold in the secondary market only after 1 year. So it's basically a 1-year lockup. So just be advised, read the small print, and know what you're getting into. The second way to get exposure to Bitcoin and what's going on in the crypto market is through semiconductor stocks, and specifically those semiconductor stocks that are benefiting from crypto mining. I have an entire webinar that addresses this. If you go to my weekly strategy call homepage or my YouTube channel that's shown here on the screen. It's the Hyper Growth Series, Cornering the Semiconductor Market with 4 Stocks. Please watch that. It's an excellent webinar and addresses this opportunity specifically. The next thing you can do is you can do a direct investment in the underlying technology that drives cryptocurrencies, and that's blockchain. So companies like Riot Blockchain that are the backbone of the crypto market. You can read through the Zacks Equity Research, and those with a Zacks rank of buy or even strong buy, those could be timely alternatives to gain exposure to cryptocurrency market. So consider those. This is an example of the ZRS Zacks Research System price and earnings chart for Riot Blockchain. And I just want you to see that the growth that's forecast to take place in this particular sector for this particular company, first becoming profitable in 2021 to the tune of about 109% growth, coming from negative 22 cents in 2020 to 2 cents positive in 2021. So just to give you an idea of what these companies perhaps would look like. The next thing that we need to discuss is one of my favorites, and it's the actual direct investment in the cash apps that have literally driven 80+% of Bitcoin volume surge. And the two companies that have literally driven 80+% of the volume in Bitcoin's rise from 5,000 to over 40,000 has been PayPal and Square, specifically their coin wallets. And when we look at what's going on with Venmo, which is owned by PayPal, and Cash App, that's owned by Square, they've literally created an ecosystem for Bitcoin commerce, okay? So Bitcoin is actually causing this massive surge in new customers to the PayPal and Square ecosystem. And there's this macroeconomic principle of the money multiplier effect for coin wallet providers, such as PayPal and Square. And the idea here is that the Bitcoin itself continues to create more value for PayPal and Square when each transaction stays within their respective ecosystem, right? So a vendor and a customer, both using PayPal, choose to exchange goods via Bitcoin, and PayPal and or Square scrapes the fees, and literally the Bitcoin never leaves the balance sheet. So this circular money multiplier effect just continues to go around and around and around. And as long as those transactions and that commerce stays within each of the PayPal or Square ecosystems, we get this money multiplier effect. That's the compounding of capital. So direct Bitcoin traffic to the cash apps creates the ecosystems as these new customers come in. Customers stay within the ecosystem, and transactions, just the fees for them just continue to accrue. And those happen for both crypto and non-crypto transactions, so both. So the value of Bitcoin goes up, the value of Bitcoin goes down, and PayPal and Square still takes their fees regardless. So this is a huge, huge area for opportunity because the coin wallets of PayPal and Square are making it possible for the average investor, the average customer now, to partake in this Bitcoin and cryptocurrency phenomenon. So when we look at the Zacks research for PayPal, you'll see that it has a Zacks rank of buy, and if you actually look at and read the research itself, it actually cites the benefit of robust growth in payment volumes coming from new active accounts, and a lot of that is obviously being driven by Bitcoin adoption. So again, when we think the Zacks rank, I want you to think estimates, right, in terms of revision agreement, revision magnitude, upside potential, and estimate surprise. PayPal currently sitting at a Zacks rank of buy. This is what the price and earnings chart looks like for PayPal. Again, solid growth, 14% for 2020, 25% for 2021 to 24% 2022. And you can see we've got a nice multiple expansion, obviously off the backside of the commerce for COVID, but now obviously with what's going on with Bitcoin surge as well. Same thing for the Zacks research and Square. Again, another Zacks rank of buy. And you can see that Square is actually set to turn its first profit here in 2021, and you can see that tremendous ramp up here in EPS growth coming from -3 cents all the way to +28 cents for an 1,162% increase. And then by 2022, it turns out to be around 179. So you can see the trajectory Square has had here as well relative to earnings. Okay. The next thing we can do is we can do a direct investment in the social media network that's actually larger than Christianity itself, and that's Facebook. And what I want everyone to pay attention to with Facebook is the cryptocurrency formerly known as Libra. So remember that when Libra was first announced, it was met with just huge backlash from regulators. And so Mark Zuckerberg went back to the drawing board. They literally quit talking about Libra. So really look into this, pay close attention, and really watch for the next iteration of this. So what's been going on is that Zuckerberg has been slowly working with a consortium that they formed out of Switzerland, and it's been rebranded as Diem, and specifically designed to manage digital currencies. So this Diem is the Facebook global payments network that's actually expected to launch in 2021. And the Diem network will operate using the Diem blockchain. And this is obviously designed to be highly scalable, secure, and flexible. And oh yeah, did I mention the user base larger than Christianity itself? How's that for a turnkey ecosystem? So anybody that's using Facebook, you can go on to Facebook. You can see that, you know, the marketplace business is just absolutely booming, and they now have payments as an option in there. It's kind of buried right now, but this is all part of this Diem plan. And Facebook obviously has just an absolute instant turnkey ecosystem. So really, really nice opportunity for Facebook. And again, when we look at the Zacks research for Facebook, again, a Zacks rank of a buy. Can't stress enough to think about that estimate revision, agreement, magnitude, upside potential, and surprise. I've got a copy of the research report up here. The Zacks research system price and earnings view, we can see that Facebook's PE multiple has been contracting literally since 2013 all the way through 18, and it's been kind of stabilizing here for the last couple of years. Really nice growth here through 2020. 2021 dips down a little bit to 12%, and then back up to 23% in 2022. Okay. So again, when we think about the Zacks rank, I've got definitions up here for anyone who wants to learn a little bit more about it. You can request this slide deck. I'll actually have email addresses and phone numbers for you at the end of this webinar. And I'm not going to spend too much time going through this right now, but you can feel free to email us. We'll be happy to walk you through this. Same thing with the use cases. Optimal time horizons for the Zacks rank forecasts are roughly 1 to 6 months. There's many, many use cases for the Zacks rank, and we've got a lot of different flavors of it, including Zacks indicator, and including the Zacks recommendation that shows up in our research report. So more than happy to walk through all of that with you. If you have questions, please reach out to us. Wanted to mention too, one of the reasons why the Zacks research is so good is it's true, unbiased, independent research. And this is a study that was obviously sponsored by our founder and CEO, Len Zacks. And it's literally was done from 12/31 of 99 to 12/31 of 2018. And it's a difference between the distribution of the Zacks rank and the average distribution of sell-side broker recommendations on the street. And you can see that on the street, there's really only 4% that are bearish and 65% are bullish, with only about 31% as being hold. And the distribution of Zacks rank is much more unbiased. We've got only 20% bullish, 20% bearish, and a full 60% as a hold. Okay, so this is really, really good. So when we're saying something's a buy or strong buy, or something's a sell or strong sell, there tends to be a little bit more conviction there with the Zacks research. Okay, so in short, we've discussed several alternatives today to investing directly in Bitcoin and getting exposure to the cryptocurrency markets. We spoke of dedicated ETFs and mutual funds. We referenced the semiconductor stocks that are going to benefit from all of the demand for crypto mining. We talked about the potential for blockchain technology stocks that drive cryptocurrencies. And we talked about the cash apps and the coin wallets that have really been responsible for driving Bitcoin volume. And keep in mind that that's largely a retail function, right? So Bitcoin volume and Bitcoin commerce being driven primarily from the retail side. And the social network larger than Christianity itself with that ecosystem and everything that Facebook has going on with Diem is very interesting. So look into that as well. Some additional disclosures. As of the date of this strategy webinar, I do maintain a long position in Facebook, PayPal, and Square, and I do not have any direct exposure to Riot, blockchain, or cryptocurrencies, including Bitcoin. So that's about it for this week. If you found this video helpful, please hit the like button below and be sure to subscribe for future videos. Thanks for watching, and I hope to see you all next Wednesday for another weekly strategy call. You can email me directly. You can contact me via phone. Feel free to hit me up on LinkedIn and Twitter, also on the company pages, Zacks-Professional Services on LinkedIn and on Twitter's ZA Tools. Any questions or requests for this slide deck can be addressed to advisortools@zacks.com or zrs@zacks.com, or you can email me directly at tnyland@zacks.com. Thank you very much, and we'll see you again next week.